Building on our understanding of liens, lien priority, and the way creditors protect their financial interests in real property, we now turn to the process that enforces those rights when debts go unpaid. Foreclosure. Foreclosure is the legal mechanism by which a lender or lien holder compels the sale or transfer of property to satisfy a secured debt. It represents the ultimate enforcement tool for a lien. A lien itself is non-possessory. It gives the creditor a financial interest, not physical possession. If a borrower defaults, the lien holder has the right to initiate foreclosure, resulting in a forced sale so that the debt can be paid from the proceeds. Foreclosure can occur through court action, statutory procedure, or through contractual powers granted in the loan document itself. Foreclosure laws are state-specific, but all share the same goal: to balance the creditor's right to recover what is owed with the debtor's right to due process and fairness. Types of foreclosure. There are three general foreclosure methods used across the United States: judicial foreclosure, non-judicial foreclosure, strict foreclosure. Each type differs in how the process is initiated, who oversees it, and the borrower's rights before and after the sale. Judicial foreclosure. A judicial foreclosure is used in states that rely on a two-party mortgage agreement between borrower and lender, and where the mortgage does not include a power of sale clause. Without that clause, the lender must file a lawsuit in court to enforce its rights. When the borrower defaults, the lender may invoke an acceleration clause, which makes the entire unpaid loan balance immediately due. The lender must then notify the borrower, the defendant, of the default and demand full repayment. If the borrower fails to pay, the lender files a foreclosure action in the county where the property is located. If the court determines that the debt is valid and unpaid, it issues a writ of execution authorizing the county sheriff to seize and sell the property at public auction. Before the sale occurs, the borrower may exercise the equitable right of redemption by paying off the full debt, plus interest and legal costs. If the borrower cannot redeem, the sheriff proceeds with the sale. Once the sale occurs, the property is transferred to the highest bidder, free and clear of prior liens, except property tax liens. The proceeds are then distributed in order of lien priority: taxes first, then other lien holders, and finally any remaining balance to the borrower. Lease pendants and writ of execution. During the court process, the lender records a lis pendens, meaning suit pending. This public notice alerts other potential lien holders or buyers that the property is subject to foreclosure litigation. It prevents further transfers of title without acknowledging the pending action. If the borrower fails to pay within the period allowed by the court, the judge issues a writ of execution, authorizing the sheriff to auction the property. This writ terminates the borrower's ownership interest and initiates the sale process. Public sale and proceeds. The sale is conducted publicly, usually at the courthouse, to ensure fairness and transparency. Once advertised and completed, the highest bidder receives title free of previous liens, except superior liens such as taxes. Sale proceeds are used to pay expenses of the sale, liens in order of priority, and any remaining balance is returned to the borrower. Non-judicial foreclosure. In many states, including Arizona, lenders can foreclose without court involvement when the loan document includes a power of sale clause. This is known as non-judicial foreclosure. The clause authorizes a trustee to sell the property if the borrower defaults, without needing a lawsuit or court order. When default occurs, the trustee records and serves a notice of default to the borrower and all junior line holders. After a statutory waiting period, a notice of sale is published and mailed, and the trustee sells the property at public auction. The winning bidder receives title free and clear of all junior liens. Borrowers in non-judicial foreclosures typically have no post-sale redemption rights, though they may reinstate the loan by paying arrears before the sale. If the property sells for less than what is owed, the lender may pursue a deficiency judgment, but Arizona law restricts these actions in specific cases. Strict foreclosure. A strict foreclosure is rare and allowed only in a few states like Connecticut and Vermont. In this process, no sale occurs. Instead, the court awards title directly to the lender. After notifying the borrower and providing a period for repayment, the court transfers title if the borrower fails to pay within the prescribed time. Deed in lieu of foreclosure. A borrower facing foreclosure may voluntarily transfer ownership to the lender through a deed in lieu of foreclosure. This option avoids the cost and publicity of foreclosure proceedings. However, it does not eliminate junior liens on the property, meaning the lender may still need to resolve those separately. Deficiency judgments and Arizona's anti-deficiency laws. If the foreclosure sale does not generate enough proceeds to cover the debt, the lender may file a separate court action for a deficiency judgment, allowing collection from the borrower's other assets. Arizona law provides anti-deficiency protection for certain borrowers. The protection applies only if all three of the following criteria are met. The loan is a purchase money loan used to buy the home, not a refinance or home equity loan. The property is residential, containing 1 or 2 dwelling units. The property sits on 2.5 acres or less. If all conditions are met, the lender cannot pursue a deficiency judgment, meaning the borrower's liability ends with the foreclosure sale. Right of redemption. The right of redemption, also known as equity of redemption, allows the borrower to reclaim ownership by paying the full debt, interest, and legal costs. States vary in whether this right exists before or after the sale. Arizona allows redemption during the foreclosure process, but not after a trustee's sale. Arizona foreclosure. Example. To understand how this works in practice, consider Maggie, an Arizona homeowner who has fallen behind on her mortgage. Her lender initiates a non-judicial foreclosure because her deed of trust contains a power of sale clause. A trustee, not a judge, oversees the process. The trustee records a notice of default, gives public notice of the sale, and sets a date for the auction. Maggie may reinstate her loan before the sale by paying what she owes. If she cannot, the home will be sold at auction. Suppose the home sells for less than her loan amount. The lender may consider a deficiency action, but if her property qualifies as a purchase money loan on a 1 to 2 unit dwelling under 2.5 acres, Arizona's anti-deficiency statute will protect her. Alternatives to foreclosure. Homeowners facing foreclosure often explore alternatives to minimize damage and preserve credit. Forbearance. The lender temporarily suspends or reduces payments to help the borrower recover from financial hardship. Modification. The loan terms are permanently adjusted, such as lowering the interest rate or extending the loan term to make payments more affordable. Short sale. The lender allows the property to be sold for less than the loan balance, forgiving the remaining debt. Deed in lieu of foreclosure. The borrower transfers title to the lender voluntarily, ending the obligation. Foreclosure sale procedure in Arizona. The public is notified of the sale date and location through newspaper publication for 4 consecutive weeks. The auction takes place at the courthouse, where anyone except the defaulting borrower may bid. The property is sold to the highest bidder, and proceeds are distributed in order: sale costs, taxes, foreclosing lien, junior liens, and any surplus returned to the borrower. If irregularities occur, such as failure to give proper notice, bidder collusion, or misleading information, a court may invalidate the sale. Typically, however, a low bidder loan will not overturn a sale unless it is grossly inadequate, usually under 20% of market value. Credit and deficient bids. At auction, the lender often bids using a credit bid, meaning the amount of the outstanding debt rather than cash. If the lender bids less than the full debt and the property sells for that amount, the lender may pursue a deficiency judgment for the balance owed. Subject to state law restrictions. Summary foreclosure is the process of enforcing a lien when a borrower fails to meet obligations. It may occur judicially through the courts, non-judicially through a power of sale clause, or by strict foreclosure where title is transferred directly. Arizona primarily uses non-judicial foreclosure under deeds of trust, supervised by a trustee. Borrowers may avoid foreclosure through modification, forbearance, or short sale. Arizona's anti-deficiency statutes protect certain homeowners from further liability after foreclosure on qualifying residential properties. Discussion. Why do most foreclosures in Arizona occur non-judicially? Answer. Because most home loans are secured by a deed of trust containing a power of sale clause, allowing foreclosure without court involvement. What is the main purpose of Arizona's anti-deficiency law? Answer. To protect homeowners of small residential properties from personal liability beyond the loss of their home. How does a deed in lieu of foreclosure benefit both lender and borrower? Answer. It allows the borrower to avoid court costs and public auction while giving the lender quicker possession of the property. What distinguishes a judicial foreclosure from a non-judicial foreclosure? Answer. Judicial foreclosure requires a court action and judge's approval. Non-judicial foreclosure is conducted by a trustee based on the loan's power of sale clause. Closing remarks. Foreclosure is one of the most impactful processes in real estate law, blending financial, legal, and human consequences. Understanding how it functions under Arizona's deed of trust system and the rights and protections afforded to both lenders and borrowers is essential for any real estate professional. By guiding clients through alternatives like modification or short sale and ensuring compliance with Arizona's strict notice and timing rules, agents and brokers help protect their clients' interests during one of the most challenging experiences in property ownership.